Hello and welcome to our Street View episode for December 2019. The holidays are almost here, so come on, let's make this fast and effective. Let's talk about what's happening in the real estate market, what's happening with Toronto's investments for affordable housing, and what the heck is going on with interest rates. Come on, let's jump right in. So our little recipe here never really changes. And so for the month of November, the supply side is represented by the number of new listings we saw for November. And we can see from the far right end of this chart in the month of November, the orange bar is a little bit lower than the preceding years, which means that new listings were down 18%. There were only 8,650 new listings for the month of November compared with prior years. And we can see how that seasonal curve, like we're heading into the holidays. This is when the market really starts to shut down. But hold on a second, business doesn't come to a halt. And with 8,000 listings coming to market, how many of them are selling? Well, that ties into the number of sales that we've seen. And we follow the chart all the way over to the right-hand side. We can see in the month of November, that orange bar is actually sticking up 14%, 14.2 to be exact. There were 7,090 sales. And when we compare that with, 8,600 new listings, you do the math here. It's like almost every new listing that's coming to market is selling. And that's really interesting because it is consistent with what we've seen throughout the year. You can see how that orange bar in the preceding months has been strong, strong, strong. And I think that's why the number of listings are down, because everything that's coming to market is selling. And so, people that are planning a move, et cetera, they're just not bringing their properties to market. I mean, we're doing the best we can. Everything that comes to market gets sold. So, and so this is an interesting dynamic because the number of total inventory is just below 18,000. And so what does that mean? So it means like if no new listings came to market, it would last about 2.5 months of inventory. So it's interesting. When we look at how much inventory there is on the market and how long it would take to sell, it helps us indicate whether it's a buyer market or a seller market. So anything less than approximately 4 months is considered a seller's market. So, and we've been in that dimension for a long, long time. And at the current state of the market being what it is, supply and demand, here's what's happening with price. We can see that it's actually up 7.1%. The average price of a home in Toronto is $843,637. And once again, we can see this very consistent margin of increase throughout the entire year. 7% is one of the strongest months we've seen so far this year. The trend that we've been watching for is between that band of 3 and 5%, which we think is far more sustainable. 4 to 6% in a really great year. And certainly when we start to get into double-digit growth that we saw not so long ago, that's where the market becomes unstable. So it's 7% on a year-over-year basis in the month of November. It's okay, but it means that it's very solid growth. Reduction in listings, steady demand, price going up moderately. That's essentially the market as it stands. So last week, the Bank of Canada decided to hold again on interest rates. This is the key overnight rate. And just a reminder, what does that mean? It is the overnight key lending rate between the banks. And the Bank of Canada sets that rate, and it influences retail interest rates that we see on lines of credit and variable rate mortgages. So it has a real impact on those two pieces of credit that people use on an ongoing basis, especially for some ongoing debt, strategically for home improvements, investment, all kinds of different uses, of course. But it also impacts our dollar, which in turn can impact our economy in more profound ways, especially in this world of trade wars and challenges internationally. But Canada, by not reducing its key overnight lending rate, keeping it where it is, illustrates that there's confidence in the performance of our economy. And unlike other central banks around the world, where in Europe they actually have a negative key overnight lending rate, and in the US they lowered their rates in the middle of the summer to stimulate their economy further, Canada has been a holdout. So it's very interesting, and we pride ourselves on having good economics and good fiscal responsibility. And so this is an illustration of that. Now, whether Canada, now post-federal election, we thought that there might be like an early Christmas gift of a lower interest rate. But it'll be interesting to see as we go into the first quarter and the year-end results are better known, what differences our economy will start to show that would encourage them to lower interest rates. Because I'll tell you, right now as it stands, with the state of the real estate market, it is setting up to be a very solid market in 2020. And if interest rates go nowhere, this continued moderate growth in both the number of sales and the year-over-year price growth will be more sustainable. And with the mortgage changes that we've seen, in terms of making it harder to qualify for mortgages, with stress tests and all of these moving parts that are in place, it'll be very interesting to see the other initiatives that the federal government had promised and will deliver on in 2020. There are regulatory changes happening to the real estate industry that we'll talk about in a future episode. It's really a compelling argument that 2020 could be a very successful year economically for all Canadians. As the Toronto real estate market continues to grow and prosper, it's important that we include all Torontonians in access to affordable housing. And so I'm very excited to hear that John Tory announced the $23.4 billion investment that's happening between the City of Toronto at about $8.5 billion, and then approximately another $14.5 billion coming from both the province and the feds, with a new 10-year strategy to create more affordable housing. And their initiative, which is an action plan that includes 76 separate actions, includes adopting a revised Toronto Housing Charter, Opportunities for All, enhancing measures to prevent evictions and people becoming homeless, preserve the rental housing that currently exists, and they want to create a land bank of properties that will support the initiative of creating 40,000 affordable housing units inside the City of Toronto, which I think is tremendous. One of the qualities that we greatly appreciate in being Canadian and living in Toronto in particular is the fabric of our society and the inclusion of all. And sometimes when a city is growing in popularity and size, it can be at the exclusion of those that were here for many, many years, who are an important part of what our city is all about. And whether it's culturally, demographically, economically, we need to have an inclusive society to be the best that we can be in the world. And being the fourth largest city in North America, I think it's an opportunity for us to illustrate to others what a great job we can do about being inclusive. So I think that's my parting comment. It really is the holiday season, and for many of you past and current clients, you've been receiving the red gift box, which marks our appreciation of all of you. On behalf of Madeline, I want to thank you for entrusting us to help you, your family, and your friends with their real estate needs. It's a relationship that we truly cherish, and I'll just want to wish all of you the absolute best for the holidays and look forward to connecting with many of you in the new year. Thank you, take care, and we'll speak to you again soon.